Hello, ladies and gentlemen, and welcome to this afternoon webinar. My name is Theo. For those who see me for first time, I'm here to introduce you your host, Jens, and then I will leave you with Mr. Jens. In the meantime, it will be interesting to know where are you joining us, in which part of the world you are. I already see some familiar names. People, they join me on the live trading webinar in the morning. So it's really excited to see you guys here. You will learn from one of the very, very good and skillful trader and investor. So in the meantime, just to make sure that everyone knows about the Instagram page here at Admirals, ladies and gentlemen, I'll share with you the Instagram. Just to make sure you follow the page, because you will receive on a daily basis notifications about some posts, some stories, some reels that's going to help you get better understanding all the time in your trading and investing. And also the Admirals YouTube channel. First, I would like to thank everyone for your interaction and that you are subscribing to the channel, that you are constantly liking the videos. That's really, really great. It means that we bring value to you. So in case you don't know, here at the Trading Spotlight, you will see all Jens' previous webinars, along with Paul's and myself. So please make sure you engage yourself. That's a great, great way to learn about all the aspects of trading and investing, that from market analysis to price action to fundamentals and to trading psychology. So I'll share that with you. Mr. Jens, hello, how are you?
Hello, Theo. I'm fine. How are you?
I'm very well, thank you. Excited on the last few days to see interest rates and the markets. They were just
yes. In fact, so that was surprising. No, I mean what the ECB delivered yesterday, especially, but also the Fed. I have to say that was kind of surprising.
Yeah.
I prepared something for you, and I've prepared something for the audience here. So just a second.
Sure.
Please listen. It's for you. And the audience, certainly. Okay?
Okay. Okay. I can see the thing going around, huh? Wow.
So
that's really awesome.
Yeah, what shall I say?
Well
so that was for you. That was for the audience. So I'm not sure if
I'm sure everyone liked it.
I hope so. At least here in the chat box, I can see amazing great. Yeah, so that's good.
Amazing great. Yeah.
So that's the last webinar this year. So I just wanted to say thank you. Yeah. Thank you to you. Thank you to Admirals. Thank you to the audience. We still have a trading day, and I've prepared something, and I hope that awesome. It will bring value to your trading. Shall I share my screen? By the way, did you see me?
Absolutely. Okay. So we also want to say thank you for your valuable content you bring all the time, and it's great to have you here as well. It's an absolute honor, because we also learn so many things from your analysis. I'm sure the audience, ourselves too. So it's really great.
Thank you very much, Theo. That okay. Was a little too much, but thank you so much.
Enjoy your session.
Yeah, thanks. So hello and welcome to today's Trading Spotlight webinar. And we wanna finish the year with a bang. In fact, or let's see whether it will deliver a bang. But I really look forward to today's trading session due to a very interesting setup we get in a stock which I had on my radar for quite a while now. And yesterday, finally, we broke to new all-time lows. It's Coinbase, and that's something we will cover here today in this event. Usually, as you can see here in the first slide, usually we focus on the earnings season. Earnings season is thinning out, at least this week. Next week, interesting enough, we have FedEx, I think, and Nike on Tuesday. I think, I'm not really sure. Probably FedEx is pre-market and then Nike is after markets closed. I'm not really sure. Next week on Wednesday, we still have, or we also have Micron. But in general, yesterday's earnings with Adobe, well, came in somehow interesting, but I'm not really sure whether this is such a great setup right now, because we are facing strong resistance, as we will see in a few seconds or a few minutes in this case, on the upside. And I'm not really sure whether really we get to see a breakthrough. Again, also due to what we've seen here in the overall market happening after the Fed and the sell-off, which is, I think, no big surprise, because the Fed really came in more hawkish than expected, at least at my end. And also when looking at the Fed watch tool, some of you probably recall the special event we had here for Admiral clients on Tuesday, where we made this in-depth topic together with Paul and Theo. And so, but I will guide you here, so just that you understand what this is for. It's not just really live trading, but it is live trading. That's something I can already say. But my process of how I filter stocks, which I consider to be of interest, why I consider them of an interest, then we analyze, and in addition to that, then sometimes, well, more often than not, in fact, during the sessions of the last months, in fact, and we have a setup and then we go for the trade. In fact, that being said, very important, please make sure that you understand that everything which we cover here is for educational purposes only. So it's likely that we will have a trade today after the market opened at 3:30 German time in this case, so in around 20-25 minutes from now. But if you take the trade, if you take the idea, the setup, please make sure that you understand all risks involved when trading CFDs in this case, leverage products, that you understand that you're taking full responsibility and that the risk involved here, and this is your risk, your trade. So you can, if there's a profit, you can keep all profits, but also if there's a loss which could occur, then make sure that you also understand that there's a chance of losing money in this case, and that you're fully responsible for this. Again, a full risk disclaimer can be found on the website admiralmarkets.com. Please also make sure that you read it carefully. Again, that you understand that all risks involved here and everything provided to you is educational purpose or for educational purposes only. And that's it. So I don't think that I need to introduce Admirals any further, but we can in fact jump straight away right into the action. And how does it look like? Well, it looks like this. So first of all, we need to make sure that we understand which stocks are hot. By the way, unfortunately I forgot to, one sec, please. I forgot to open one slide. One sec, please. I just have to make sure that I find it. So usually at the beginning of the week, that's usually on a Saturday, I retweet the earnings calendar from Earnings Whispers, which is, by the way, a source which I highly recommend following. I will show you in a few seconds. Let me just here on my second screen, find the link. There we go. Take it from there. So here we have the earnings calendar. And this is the site I recommend you following. So Earnings Whispers in this case. So this is a tweet, as you can see, 10th of December. So this is Saturday, each Saturday, and then this will be posted. I'm very sure you will also find it tomorrow here. Even though the calendar will thin out dramatically into the close of next week, given the fact that we have the Christmas season ahead of us. But as you can see here, so this is quite nicely put, in fact. So the big news event, earnings events, and here Adobe, as you can see, was hot or released earnings yesterday. That doesn't necessarily mean that the stock will be hot, in fact. But how do we find out that the stock is hot and of interest for us? So first of all, Adobe is a name everyone will potentially recognize. Most of us probably also use Adobe and their software. But still, that doesn't necessarily mean that the stock after it's or the stock of the company is hot after it released earnings. So the question is, how do we find a stock which is in play, which is hot? And therefore, we then go each morning. In fact, we go to the pre-market screener. And here in the pre-market screener, this is from MarketWatch, which is completely for free, by the way. So you don't need to pay anything for that, but you can really start already to filter stocks. I will call this pre-market screener. And so you can check out this website, and then you can see here volume. So this is a very important column. In fact, it's probably the most important one for our purposes here, given that we want to find out which stock is hot. Why is a stock hot? Well, because already in the pre-market, not just after earnings are released, but also in the pre-market, which is taking place between 9 to 2:30. Yeah, 9 to 2:30. 9 a.m. till 2:30 p.m. London, in this case. You see market participants, especially institutions, already opening and closing trades in the pre-market, trading in the pre-market. And the more active a stock is traded in the pre-market, the more likely it is that institutional players are obviously working with the freshly released earnings in this case. So, but trading, let's say 3 shares here, let's say for TNL, I don't even know the company, Travel Plus Leisure and Co. 3 shares. Well, that means there were 3 shares traded. This is not really interesting. Right above there's Adobe, and you can see here 68,000 shares being traded in the pre-market. Now the big issue with that, this is not really hot. Why do I say that? Because I put this number here in relation to what we get to see being traded on average per day. So therefore, I recommend you to check out finwiz.com. That's also for free. And with Finwiz, and also a link I will share here, you can check out fundamental details about a stock. In this case, like what's the market cap, what's the income, how many employees do they have, and so on and so forth. You find everything here in terms of fundamentals, everything for free. And what I find of high interest here is the average volume column. For my purposes, first of all, to filter out whether the stock is traded relatively active compared to what's happening usually in the stock. So if I have an average daily trading volume here of 4 million shares, then I want to see, to consider the stock being hot, a minimum of 10% of this average daily trading volume being traded already in the pre-market. 10% of 4 million is 400,000 shares. And then I start to say, well, obviously now market participants are interested in the stock. In addition to that, I'd like to see a gap on the upside, on the downside, plus minus 3%, especially, or a break above, due to the earnings release, above an important resistance, respectively below an important support zone. And so in fact, we get the gap higher, yes, of more than 3% in this case, 4.65, but only 86 around 86 68,000 shares being traded in the pre-market. So significantly below what you see a stock doing here in the stock should do in the pre-market, and the institutions showing that institutional traders are interested in the stock. So that being said, is like I wouldn't say it's a no, but it's like my expectation is, let's say, not such high, or I don't have such a high conviction that this is a potential interesting trait which we could get to see. Why is that here in this case the stock is not that actively traded? Well, earnings were okay. I have them here in my Twitter feed in this case. So at Jens Klatt FX, if you're interested, you can follow me there. It's mostly German, but for purpose, or especially finding out, some of you probably wonder, okay, I want to try that out, but still I'm not really confident whether what I try out here is really then useful. Also, I recommend you following me here, because each day around 2:30 German time, so around 1 hour, 45 minutes before US markets open, I have here such a picture I post, which is then the hot US stocks for today. You can see here ADBE, you can see coin, and you can also see the Qs, which is the ETF on the NASDAQ 100 in this case. We will look at this in a few seconds, but you have then an overview of which stocks I watch. And usually this is the checklist I go through. So do we have fresh news? Do we have a breakout above or below a certain level? Is there elevated volume being traded in the pre-market already? Do you see significant gap on the upside, on the downside? And based on this checklist then, and my expectation in terms of, well, is the stock interesting to trade? So is it tradable, let's say? I really appreciate to see a high shares float. So I'm not focusing here on low float stocks or that stuff, but I'm really focusing on let's say blue chips, or respectively bigger companies in this case, with an elevated shares float. I aim to see a shares flow of minimum 100 million shares being traded around, not necessarily average daily trading volume, but this is also, I'd like to see more than 1 million shares being traded for the day, so that there is some, not, let's say, spreadiness. So the spread is considerably tight, and that you don't have whippy pushes on the upside, on the downside. And so coming back now to the pre-market screener. So we have 68,000. We said earnings yesterday. Earnings were okay. I mean, they had a small beat here on the EPS side, with 360 earnings per share against 350. A revenue which came in for the last quarter as expected. Then they guided the earnings per shares higher, or at the upper range, estimate 365. They come in at 365 to 370 for the next quarter. Then the guidance on the revenue was below expectations, and this is the thing. That's probably the reason why the stock is not really, let's say, taking off. Probably it's also due to the overall market environment in which we find ourselves after the Fed now, but it's like, it's a small beat, but it's not a very strong guidance, let's say. So this is definitely something to consider, especially for the full year. You see, we have an earnings per share which comes in as expected, 1550 to 1545 against 1531. Well, this is around this and within the range which was expected. Revenue slightly below expectations, so nothing really great considering what we saw for the last quarter, slight beat. And that being said, well, it's a positive reaction at least. So we see a gap up. Let's just update the state once again and see if this changed a little. So now we have 75,000 shares. But there's no significant breakthrough on the upside. I prepared here the chart with Adobe. So this is my trading setup in this case. So we have a 5-minute chart here. This is where I entered the order with the mini terminal, and here the ladder, the order ladder in this case. Here I have an hourly chart, and here we have the daily chart. And as you can see, if we zoom in a little, so we are in a significant downtrend. Most likely the reaction on the upside is due to the fact that we are very beaten down, given what we've seen over the course of the last around 12 months. So we topped out, we saw all-time highs around the 24th of November, 2021. And then from there, we went straight down, and then a significant downtrend. But still, we now started to form a bottom over the course of the last 3 months, as you can see here, and we're respecting a higher low around 320 around. So 320, 325. As you can see, we are holding higher, and now we are gapping higher. And this is now interesting because this is the spot market. So you can only see what's happening during 3:30 till 10 p.m. German time in this case, so Wall Street, once the spot market is open. But also in the already in the pre-market, as you can see, we have some action happening, and we are right now trading around 345. So 345 means we will get to see an open around here. And as you can see, this is a tight range which formed at a higher level, and we're opening now here in a range of the higher end of this range. So some might probably say, hey, this is probably likely to break out on the upside. The question is, will that really break out? Well, I'm not really sure about that, given what we've seen in the overall market. So if you here take this spider, as you can see, this is the ETF on the S&P 500, and probably zoom in a little. And if you see here the break in the spider below 390 around, so it's multiplied with 10, you have the S&P 500. The break below 3,900 is a bearish sign, and we are trading significantly below that level already in the pre-market, as you will see once you look at the CFD, which is referencing to the future market. So I'm looking here at the spot market, so that's why we are not seeing anything here. It's an ETF, which is also only tradable between 3:30 to 10 p.m. German time in this case. But we're trading below that. It's a significant support. It's a clear bearish breakdown. We've seen yesterday solid selling pressure all day long, following the Fed. Also following in the right now in the pre-market, following European markets, which were potentially surprised by a very hawkish ECB yesterday. So that being said, and with this overall bearish bias we formed, especially following the Fed now. The thing is that it seems somehow unlikely that Adobe will completely decouple from the overall market and break on the upside here. And that being said, now with a guidance which comes in small beats on the earnings side, well, I'm not really sure if this is enough to push us out of this range here on the upside. And that's definitely something to be a little skeptical about. What I could imagine now is saying, okay, well, if we see a drive into the open, push into this area of resistance here, but we are rolling over, not holding, then probably we get to see a so-called fake out on the upside. And then probably I'm willing to short the stock. But again, earnings weren't that bad. So that having that in mind, now the question is this really a potential play? Now we come to something I do in the pre-market. So everything I told you right now, I've written it down already here. So I'm well prepared for the trading open. I'm already prepared. And so what you have here in my Excel file, I type in the ticker symbols, and I usually type in at the upper range of this. I have the hot stocks, let's say, which had earnings. In this case, as you can see here, that was the news. And then here we have so-called second day plays. This is something we focused on last time we had this event here. Now today, it's a technical play. In case of coin, we'll look at this in a few seconds. When looking at Adobe, you can see it's not green, it's blue. Because the thing is, now it depends a little on what the market delivers right on the open. If we break higher and hold above 350, I could imagine to trade the long side. If we spike into 350, roll over and drop against that level, I'm willing to take the short side. And that being said, leaves me a little unclear about what will happen. That's why it's a blue color you can see here. If it's red, it's only the short side, and that's the only side I focus on. In case of Adobe, let's see what the opening brings. And then you can see here I have a game plan, and I'm also filling in the trade fundamental, or not the trade fundamentals, but the ticker fundamentals in this case, or what the market is right now delivering. So I want to have the gap included here. I want to have the average daily trading volume. Here is something we can now here update with 75,000. By the way, let me just check on my screen here where coin is 316, if I'm not mistaken. Yeah, minus 19 right now in the pre-market, and 316. So this is, let's say, hotter It's not really hot, but still hotter, or hotter compared to what Adobe delivers right now, and especially technically more interesting, but we will look at this in a few seconds. And then I have the ATR, which is very important for us to have an idea of how much potential does the stock have if a trade is triggered. So how much potential can we expect the market to have then, given what we usually see on the average trading range, average true trading range we have each day. Also something I fill in. And then you can see here short percentage and INST. So short percentage is how many, or what's the short float. This is, by the way, everything around this is available here on Finware. So you can see here short float, it's 0.99%. Institutional ownership, 84% in this case. You will see why this is of importance, not necessarily here, because this is not really special, but it's more important when it comes to coin in this case. You can see here, I have this in red, 21.35%. What does this mean, short percentage? It means that, coming here to Finwest, it means nothing more than we look at how many shares are traded and what percentage of this shares float is shorted from institutional traders, especially. So if you have 175.62 million shares being floating around, shares float, and then 21% of these are, so 1/5 is shorted, that means nothing more that something like 30 million shares, a little more than that, is shorted. This is important news, especially if we consider trading the short side. Why? Well, I think everyone listening to this right now has heard about so-called short squeezes. So that means if you have bad news on a stock, let's say, very bad news, the stock is gapping down and you have a high short float, well, potentially some market participants might say, I cover some of these. Such covering means they are buying back the stock, which could then not drive lower, but instead push higher, or at least spike higher. And this is especially true once here we have a short float which is above 20%. And that's why a downtrend could be, let's say, whippy once, or choppy. Could like we have a short tendency, but there could be some spikes which you should consider, especially when working with hard stops, for example. So keeping this in mind in terms of what to expect. But well, again, let's come back to we had Adobe now, but the thing is, I'm a little skeptical whether Adobe is such a great play. What I consider of higher interest for our purposes here is in fact coin. Thing about Coinbase, so the crypto exchange, you might probably have heard of, and you probably have heard of about all the turbulences now with FTX and SBF being arrested in the Bahamas, and now everyone has an opinion and is interviewed on CNBC and so on and so forth. And then now I think it was Kevin O'Leary. Some of you probably have heard or seen him at least. He's one of the guys from Shark Tank, and also promoted FTX in a quite strong way, let's say, and is now attacking the exchange, which is connected somehow negatively to the bust, let's say, of FTX, Binance. And so now fears are rising that probably there could be another attack, or that Binance, the biggest crypto exchange out there, gets into trouble, which could then lead to another wave of turbulences in the crypto landscape. And in addition to that, you don't know where does coin stand here? Well, how is it connected to other crypto exchanges? How could it be attacked? Is there some massive withdrawals pending? Whatever. So this is usually a bad sign. And that being said, now we come to you can probably see it, but if we look carefully here, you can obviously see that's a strong downtrend. And we know broke, as you can see, we opened around $40, and yesterday we saw a close below 40 USD per share, which means nothing more than coin is right now opening at new all-time lows. And this is interesting. So the stock itself has no fresh news, but it's technically interesting. So this is a minus, in fact. If there's no catalyst, you can create one with all the stuff happening right now, but around crypto especially. But all in all, there's no fresh catalyst. So that's one reason to be not as aggressive as I usually would be if there was a news catalyst letting us gapping down. And the news catalyst means nothing more that more market participants are watching this, and thus there's a buzz around the stock in this case, and this could add fuel to the fire in this case on the downside. But all in all, we are trading around all-time lows, 2 new all-time lows. And so that being said, delivers us now with a potential short setup. And therefore, let me just show you how I prepare and which chart we use, in fact, when I enter trades. So I use here, obviously, TradingView. We are looking at CFDs in this case. So why do we use CFDs? Well, we want to short a stock. That's not possible for us as retail traders, or very difficult at least. And thus, we need another trading vehicle. And in this case, CFDs, contracts for difference, deliver such an opportunity. So that being said, we focus on CFDs, but there is a negative side. I'm not really sure about this, but there's no true volume involved here when trading a CFD. So you don't really see what's happening in the stock and how the order flow presents itself. The volume, does it come in? Does it flow out? What's the time and sales looking like, and so on and so forth. And that being said, then makes it necessary that we have a look here at the true volume and the trading which is taking place at the stock exchange. And that's exactly what we're doing here, and what I get with TradingView in this case. So that means what I do is I look at the true traded volume here at the Nasdaq, and then at the chart from yesterday for formulating a game plan for the day then. And so I pointed out 37.50. These were the lows from yesterday. It was a closing price, by the way, around 38. So you can see that there. I have R1. These are my technical levels, and R is obviously resistance, while S is support. 37.38. Let's see which level we potentially test. As you can see, we're coming in now, 330. Okay, right now you can see that there's no trading taking place. That's very simple. The liquidity providers here providing liquidity for CFDs, they have no opportunity to hedge their exposure in such, or at least they have difficulties to hedge their exposure in such a volatile market environment with the market opening. And that's why they say we have a delay of 5 minutes, and after that we can offer liquidity in quotes here. So that's why we still have 3 minutes to go till our trading platform opens. But my idea now is the following. So we are opening at a new all-time low, trading to and obviously having trouble around the lows from yesterday. And my game plan is straightforward and saying simply, well, if we can't really recapture the lows from yesterday and holding below the closing price from yesterday, and probably also continue to trade lower in the overall market, in this case in the Qs, for example, so the tech sector. In this case, lows can be found around 275, 276 from yesterday, and we're rolling over here and seeing selling pressure. I expect coin to continue to perform on the downside. So right now we are overshooting a little, but as you can already see, we have trouble here into this pop into the open, let's say, to reclaim 38. And that being said, delivers already an idea on what we want to do. I don't want to be long about something you can see here. So this is a trend line. It's a trend line. It's not really a trend line. It's in fact, it's the volume weighted average price. So it's the price which was paid on average from market participants based on the volume. And if we are dropping below that line, holding below that line, I want to be short. But not only do I want to see it drop below that level, but also that we hold below here 37.50 in this case. So in this case, now we saw the pop on the upside, travel obviously to reclaim the 38 level in this case, respectively 37.50. And now what you want to do is, if we now roll over and hold below VWAP in this case, I consider this to be interesting for a short play and risking then against the highs from today. So if we have now the intraday high here at 370.85 and dropping now 370.40 in this case, we have a risk of around 40 cents. And then we are going for the short side and aiming on a break below the pre-market lows, which is 37. And then we have a so-called trade to hold. So we continue to trade then on the short side, expecting the trade to continue to trend lower since we're trading at all-time lows. And all-time lows means there has never been any buyer or seller or any zone of resistance or of support. So it's just like we have to wait until we get a clear sign that there's buyers stepping in and holding us. Until that's not the case, we hold the position on the short side and continue to ride the trend on the downside then. And that's in fact it on Coinbase. So that's the play, technical play. We also want to have a look at Adobe right now. So as you can see here, let's see whether we hold below VWAP. If we drop below VWAP, so we push higher now. Right now we have trouble, yes, but we are not trading below this, let's say, trigger line. In my case, probably that's a good way to put it. Let's see what Adobe does. So Adobe sees a strong opening drive. As you can see, by the way, I game planned that also. You can see it here. If drives and holds above 350, so we're pushing straight away, right from the open into this area. But now we want to, if I plan to play it from the long side, we want to hold it above that level. If we don't hold above, second scenario comes into play. We are spiking into this area, rolling over, dropping below VWAP, holding below, and I'm short because I think that the earnings are not strong enough to push us out of this range we identified. And so right now it's a game of patience. In fact, yeah, it's a game of patience. Now we have to wait. Let's see what happens here with Adobe. So obviously we get trouble. Now the market opens also for us here in the CFD space, as you can see there. And now we are dropping below or holding below 37.50. So the lows from yesterday, as you can see here. And now let's switch over and see. So now we dropped also below VWAP, as you can see here. So we dropped VWAP now. I'm still not short. So this is a very, I mean, there's another way I approached it to trade this. So we could also say, well, I'm shorting now, right, the drop below VWAP. But I think that's a little difficult because it's not hot enough. The stock is not hot enough in this case. And this is also something which could happen then. So we just spike below and then we rebid and we pop back to the highs. So that's definitely something to take into account. Right now we haven't dropped this let's call it trigger line. So I'm still patient, waiting what will happen. And if we hold below, or if we consolidate below, if there's a tight consolidation below, then I consider this to be of interest. Again, so this is a very whippy market opening right now. So it's 5 minutes into the trading day. You see some up, some down, and in this case, so it's also with this jumping, let's say, that's probably a good way to put it. So this just jumping up and jumping down and jumping up 50 cents and jumping down. This is already showing that the market is, or that the stock is not as liquid as it should be for being really hot, which is, by the way, one of the reasons why I then start to consider scaling back with my position size. So we have two reasons not to be, minimum two reasons, to be not too aggressive when trading this stock right now. So the first reason is there's no real hot news triggering that. So our trigger is we break below all-time lows. And that's why we want to short the stock, because we expect the weakness in crypto to continue, probably also driven by the restrictive FAT from Wednesday, so on and so forth. But this is our trigger. It's no big news. We can create one again, but it is not a news which makes the stock significantly hot. So this is the first thing. Second, when closely watching, observing the price action there, and you see this jumping up and down, again, liquidity is missing. So that's one of the reasons to be a little, let's say, not just patient, but also cautious. What I definitely consider to be interesting right now is that we are holding now after a quick pop on the upside, that we are holding below 37.50, have trouble to reclaim that, and also that corresponds with holding below VWAP in this case. But still, I'm still patient. Let's just see overall, and also here when looking, for example, at the Qs, a second or a good reason to enter is also to see the overall market being weak, let's say, which means weakness in this case would be measured by, in case of the S&P, dropping and holding below yesterday's lows. You can see them here. And thus, this is also then corresponding with this drop below the volume weighted average price. So holding below that level adds fire to the fuel on the downside. And then it would act as kind of, let's say, confirmation in this case that we're good for the short side. Let's just see. Now we get to see a drive. This is a potential add scenario here. The drop below 37 and holding below, that's also an option. Let's see if we drop that level, hold below that. It's another way to trade it that way. If we hold the 37, see a bounce, but hold below volume weighted average price, this is also something then to consider for a short with risking against the highs. But I'm still not, as you can see, so I'm not really like I have to jump in right into the action right now, but I want to have a clear, clean picture, clear setup to show. Right now we see the drive on the upside failing. Now the question is, do we break straight away and hold below 37, or is there another bounce higher? So and that's why I'm right now not really jumping in, because the pattern, it's just, well, probably a better way to put it, it's a pattern I've seen too often in several stocks. It's also coin in this case to repeat, and I don't clearly see it that now it's a clear short. So that's the reason why I'm holding back here a little, and I'm not really aggressively shorting this trade. We are flushing now below that. Let's see if we hold below that. That could add fire to the fuel on the downside. We're now dropping also here to VWAP in case of the Qs. If we drop below, holding below, that's then a potential relative weak play in case of coin, and then we're shorting there. And exactly as you can see here. So this 50 cents up and down move. This is exactly what I'm talking about. Because if you want to see a trade now and play momentum on the downside, well, you want to see the trades straight away working for you. So we break and continue to move lower. If we flush below 37 and we're now jumping back and see a bounce of 50 points on the upside, well, this is not really confirming our thesis in this case to play the short side, and something to keep an eye on in this case. So that's one of the reasons why I'm still holding back a little, but 37.30 now, this reason here, or this area around the volume weighted average price is potentially a level to clearly watch, because if we can make it back above that level, or if we're now consolidating here around 37, not really seeing any attempts to reclaim this volume weighted average price, then we start to see potentially a play on the downside. I probably go with a reduced position size in this case, and risking, let's say, 15% of my daily stop in this case. So, which is, by the way, individual. So if your daily stop, let's say, is 100 euros or 100 USD, and you're saying, well, I'm willing to risk 15% of it, well, you're obviously trading it with $15, 15 euro risk, depending a little on whether you're capable of doing that. But with the micronization and fractals being offered from Atmos, it's also possible to scale down, which is very, very great in terms of a solid risk and money management plan, and to also be very flexible in terms of the position size, even if you're not 100% confirmed, if it's not a, let's say, A+ setup for your setup here, where you're risking as much as you can, let's say, based on your risk parameters. While this is probably adding up to C, if I'm optimistic, probably it's a B setup in my case, and that's why I'm risking less, and I'm risking especially less if it's a C setup. So now this is interesting. Now let's see if we reclaim here the volume weighted average price. So right now we now bounce back, and now we have to see whether we claim it. If we don't, well, we have probably a short against that level. The question is then, okay, against which level do I risk here? So you have seen that it's quite whippy. That being said, delivers us with probably a reduced position size, as I already said. And I'm probably risking against the intraday highs, which is then 37.80, around 37.80. So which means a risk of 50 cents. by the way, if we make it back above that level now, as we can see now, well, you're not short. Okay, so this is then we hold above, and then the thesis, in fact, for the opening phase, it's gone. So then we don't have a trade. Let's have a look here at Adobe. Okay, this is getting interesting. This is getting interesting right now. Why? Well, we failed obviously at 350. So we pushed to the upper end of the range. So it's a 1 minute chart. Let's go to a 30-minute here probably. You can see it there. So this is the higher range of the or higher part of the range. And as you can see, we're failing here, having trouble to clear that level. And now could be that the second game plan plays out. So we drop here, have trouble to reclaim the highs. So we're holding the volume weighted average price. But the thing is now, if we now drop and drop below 346 in this case, this could be interesting for a short play. Given this play I formulated here. So if pops above 350, which is did, but rolls over and drops below the volume weighted average price, this is a potential short and holds. Certainly it has to hold below VWAP, but in the overall market, this is also interesting. The interesting thing now is that the drop is 346. So in this case, we'll probably go for 339 in this case. So we have to slightly adapt the game plan with the targets we are aiming for. On the other hand, we are not short if we make new intraday highs right now. This is then a sign. In fact, we could consider this to be a sign of strength. In fact, that we are holding 350, and then probably aim for a long trade, but not based on what we see now around the opening, but more like consolidation, tight consolidation happening over the course of the next hours, minutes to hours, above here the volume weighted average price, and then take a long out of this consolidation here. So interesting price action in coin. I'm still not short, but I like to see holding us below 370.50. We're unfortunately not trading below VWAP. So very choppy price action. So for weakness, it doesn't look really weak, but it also does not look very strong. So we have trouble clearing or making it above yesterday's highs. It's probably a spot which we could enter a trade. The thing is now we're at the end of this webinar, so we have to cut here. But I'm not 100%, but I'd will to risk at least partially against this, or based on this price action right here. And what I want to see is if I enter a trade here. So hypothetically speaking, if I enter it right now, let's imagine we're 15 minutes earlier now, and I enter the trade short. I want to see it work straight away. So I enter the trade. I have a stop here above 370.50, and then I want to see it walk through, break below 37, and two new intraday lows. So that's the trade then in this case. If I enter a trade here, I'm probably entering it right now, not necessarily here, but below 37.19 probably. So here, this small wick you can see there. So that's probably a level which I would short. Okay, so no trade today. I'm sorry, but yeah, as you can see, so I have a clear vision. I know what I want to see, and as you can see here already. So that's probably now not really. Again, 20 is the level. So we are holding, or we're breaking 20 in this case. The more you watch a chart and you see such developments, the more you can formulate and visualize what you want to see, what you have to see to then enter the trade once the opportunity presents itself. So, and in this case, it's just not right now. It's not there. I can't see it. It's very difficult, in fact, to explain this in depth to someone who's potentially completely new to this. But you just don't see it. Like there's other ways or other opportunities where you just see, okay, we break to new all-time lows. We see a small pop, don't make it, break below, very tight consolidation right below, and this is just exactly what you want to see, and then taking it from there. You just know this is the trade, now it works. So and this is not happening here, at least not now. Probably it will in a few minutes. By the way, Adobe now made new intraday highs, so holding VWAP is a strong sign. If we now consolidate here against above 350, then we could consider this, by the way, as a bullish breakout on the upside, aiming first of all at 356. If we break above that, probably 360. Yeah, so that's from my end. So I hope you enjoyed the webinar. I hope you got an idea, even though there was no trade now, but how to analyze, how to spot stocks which are potentially hot. Again, I invite you to my Twitter channel, just at Jens Klatt FX. Just check it out every day around 1 hour 45 minutes before the Wall Street opens. You have my potential hot plays for the day. I do this really every day, so just check it out. So if you're interested, and shoot me an email or comment below this video if you have any further questions. I'd be more than happy to answer them. And that's from my end. So I already said it at the beginning. I will say again now, Merry Christmas. Have a nice, happy New Year's Eve, and talk to you again then in 2023. I think the next webinar will take place. Let me just give a quick glance on the 6th. Yeah, with the non-farm payrolls. So in January, by the way, you can see there. So no short, making it now to a new intraday highs. Talk to you on the 6th of January, and all the best from my end. So Merry Christmas, Happy New Year, and then talk to you on the 6th. I really look forward to it. All the best. See you. Bye-bye.